What am I going to get for my money? What are you crazy people doing? This is fraud. Fraud, fraud, fraud.
Hello, welcome to this BRITE interview series. My name is Jake Rakosi. I'm your host today, and today we're happy to be joined by Anessa Santos, founder, managing partner at IntelliLaw. You are one of the leading voices and researchers in the blockchain digital ledger industry, so lots of exciting stuff to talk about today.
Well, thanks for having me. I'm actually really excited to be here.
So you're based in Orlando, and you're really one of the leading voices in the industry. And we had an interesting conversation before this about how you kind of got started in this, since there isn't too many attorneys that are in this space. So it kind of started off where someone was like, hey, can you present on something?
Yeah.
And little did you know what it turned into, a whole career for you, really.
Yeah. It's been definitely a road of surprises the past few years. I'm on the standing committee on technology law of the Florida Bar Association. And so 2-3 years ago, Al Cycli, who is our committee chair, he's like, hey, it sounds like you know a lot about this network infrastructure kind of stuff. Why don't you put together an hour continuing legal education credit for the Florida Bar on blockchain and smart contracts? And I was like, yay! I was really excited about just the opportunity to be able to share with my colleagues, but I didn't know anything about blockchain, like zero. And had I known what I was getting myself into, I might have said no. So I think it's a pretty good thing that I had no idea. It took me 104 hours of dedicated study to the topic just to produce a single-hour lecture on blockchain and smart contracts. And that was a few years ago.
And a couple years later, you're one of the leading voices. What have you learned along the way, and what's really some of the biggest takeaways you've had over these past couple of years? And I mean, you're very passionate about it too, so where did that kind of develop from? Yeah,
I'm so glad you asked that question, because it was during the 104 hours of study. So I remember one night I was up, it was like 1:30, 2 o'clock in the morning, because my personality is that when I get like this little thread of something and I'm like, I feel like I've almost get it, you know, I didn't want to go to bed until I had just really traced it down and I was confident. And what that thread was is the power that blockchain has to radically lift billions out of poverty. And that's what really impacted me, because you see, when I was first licensed by the Florida Bar 16 years ago, I started out as a criminal defense attorney with the Office of Public Defender in Fort Myers, Florida. And I'm fluent in Spanish, and I had this client from Guatemala who was a migrant worker picking tomatoes in the fields of Immokalee, Florida. And he would move approximately 4,000 pounds of tomatoes a day for $63. Well, what really impacted me is that he came into my office. He was charged with resisting arrest without violence. And as I learned, as the story went, he was on his way in a vehicle with a friend who was driving to Western Union to send the money that he had saved back to Guatemala to his family. And I learned that he wasn't able to open a bank account to place his money for safekeeping the cash that they were paid, because he didn't have the proper identification to open a bank account. And so what these migrant workers were doing, they were collecting their $63 a day and carrying it with them on their person back to the trailers where they lived, right, to the shower room or to the fields, where they would keep it in these wads that were subjected to a lot of the sweat and the heat, you know, from triple-digit temperatures. We all know what that's like here in Florida. And so the bills would amass and they'd become moldy and they'd stick together. And so when the cops pulled them over and searched them pursuant to an arrest on a suspicion, he found this money that my client had amassed, and he said, well, you're a migrant worker. You shouldn't have that quantity of cash on you. Obviously, it's for dealing drugs, and so he confiscated that money from my client. And I was able to get my client off on the charges of resisting arrest without violence, but because I was a public defender, I wasn't able to go and get that hard-earned money back for my client. And that was the first time I, as an American, had ever heard that you couldn't open a bank account. And I've been completely blind to what a lot of the people in this country and around the world, that they don't have access to banking and financial services that form the fundamental basis of economic opportunity. And I was appalled. I was absolutely appalled because they had no choice. So when I learned that blockchain can fix that, well, I was like a dog on a bone.
Yeah.
And I had to chase it down. And so when I figured this out at 2 o'clock in the morning, I wasn't really sure just then and there how blockchain was going to fix it. I just knew that blockchain could fix it. And so from that point on, I enrolled at the Said Business School at the University of Oxford. I've taken several courses in blockchain strategies and financial technology, and I've attended a lab and working with brilliant minds from all over the world to understand what are the uses for blockchain. How can we leverage this technology for financial inclusion to lift 1.4 billion people around the world out of poverty by giving them a government-ordained identity so that they have an opportunity to access the services that form the basis, right, of opportunity in life. And so that happened a few years ago, and this is why I'm so incredibly passionate about it. It's the element of human rights, and it's perfect, right, because the implications that blockchain has utilized in existing and prospective business processes, it has the power to do the same thing for business, right? Not giving them a government-ordained identity, but giving businesses the opportunity to do business better, provide better services and products, streamline efficiencies in ways that we never before could have imagined, and solving big problems that businesses have around the world today.
And right now I think we see a ton of companies out there and new startup ventures trying to utilize and leverage this blockchain technology. As an attorney, from your perspective, how important is it to have that legal representation, right from the get-go?
I think it's really important. It's absolutely important because there are decisions that have to be made every single day in a business, right? Running a business inherently involves taking risks. You have to make these judgment calls, and you have to do it without the help of a magic 8-ball or a crystal ball, right? You wish that you're like, well, if I just knew how this was going to work out today, then I could make a better decision. An attorney oftentimes can take the place of your crystal ball by letting you know what's hiding behind door number 1, door number 2, door number 3 of these options to help you get a better vision of how your choices today will impact your business tomorrow.
Can you tell us about some of the projects you've worked on and any projects you have that are your favorites?
Well, Actually, there are a couple of projects that I have which are my favorites. One of my clients is building out a crowdfunding platform, and I'm really excited about crowdfunding generally and the impact that blockchain has on crowdfunding. So, are you familiar with crowdfunding?
Decently, yeah.
Yeah? Okay. So, for the viewers, crowdfunding is generally when you go out to the public and you raise money from the public, right? So it's a new rule. We didn't used to be allowed to do this without being a fully publicly registered company, which is like way cost prohibitive. But with the new crowdfunding rule, you can now go out and involve the general public, like regular people, everyday people off the street. They now have an opportunity to invest in your company, invest in your products, invest in your services. And in involving the public, you can turn them into your ambassadors, right? They're not just your investors, but now they become your ambassadors. They become your consumers. And so there's this really great new dynamic that businesses can create with their investors and their consumers. So I'm excited about that particular project. And I'm excited about another project, which is utilizing blockchain to do something similar to create and support renewable energy businesses.
Tell me a little bit more about that. That sounds interesting.
Yeah. So this particular client, I have dropped them out. The parent company is in the United Kingdom in London, right? And then they've got a subsidiary in Dubai where most of the operations are. And now I've dropped them out a subsidiary in Wyoming to take advantage of Wyoming's 13 blockchain-friendly bills. And what we're doing is we're going to be raising substantial funds. In this particular case, this one's accredited investors as opposed to my client on the crowdfunding, who's developing the crowdfunding platform. And so these accredited investors will have an opportunity to invest, but instead of giving them a stock certificate or maybe even a notice of stock certificate where the record of shareholders is kept in an Excel spreadsheet, we're actually going to give them a security token issued on a blockchain, right? So that one's a lot of fun. And those funds will then go to develop, manage, and maintain biomass plants in Indonesia.
I'm glad you mentioned security tokens because that's something I wanted to touch on a little bit. A lot of startups can raise funds through that. What kind of options do they have when they do that?
Okay, I'm really glad that you asked this. This is like one of my favorite topics. Okay.
Good.
All right, I'm all happy. Okay, so when you're raising money as a new business, there's a lot of rules around this. It's highly, highly regulated by the Securities and Exchange Commission. And folks may have heard of an ICO. Have you heard of an ICO? You know what those are? You can tell me a little bit about those and how they work.
Initial coin offering is what you're saying?
Yeah.
So basically when a company gets started through the blockchain, and pause me if I'm saying something wrong here, but they offer the ICO to people who can get in on it before it's actually publicly out there. Am I somewhat correct in that?
Yeah, you're almost correct. Yeah, before it's out there, it's called an airdrop, right?
Okay.
Which is like a pre-ICO drop of the coin, and then afterwards. Yeah, but are you familiar with all the fraud that was going around? And
I am familiar with that. Just a lot of pump and dumps is what I've heard of a little bit, where people
they inflate.
They inflate and then
they inflate
sell.
the value. So the issue is that for the past several years, there was an attorney in a big law firm, and you can Google who it is and figure out who it is, but this person was not a securities attorney, and he came up with this bright idea that said, hey, if you're buying a digital coin, then it's like buying a shirt at a store, and I get the money for my business, right, like regular fundraising, and it's not a security. That's what this individual said. And so they went around selling this concept because of the great branding that they had behind them with the law firm. And the market went wild. It absolutely went wild. And so all of a sudden, all of these companies were like, yeah, we're just going to issue this digital representation of a coin on the Ethereum network. Right? They were issuing all of these Ethereum blockchain-based digital coins, and we're going to raise millions of dollars, and all of these companies did this, and none of them thought that this was a securities offering that would be regulated by the SEC.
Okay.
Well, without getting into the details, because we don't have enough time, the SEC came back a couple of years ago and said, what are you crazy people doing? Stop it. This is fraud. Fraud, right? Because there's a 4-part test to determine whether or not a fundraising effort constitutes a security offering and thereby has to comply with this whole laundry list of regulations. And so now they've gone after everyone. And every week in my email box from the SEC comes another ruling that this ICO, or initial coin offering, that some company did was fraud, right? They're going after people, and they've been doing this for years. Conversely, you can take an offering to raise funds in your business, like a regular securities offering, and instead of giving somebody a stock certificate, or instead of managing your shareholder list in an Excel spreadsheet or in some cloud-based software as a service database system, you can do this on a blockchain. And you give somebody a digital representation of their stock certificate. That's called a security token offering, or a digital securities offering, a DSO, an STO. They're completely lawful. They're very successful. They have spectacular benefits, especially in the crowdfunding space, because when you're going out and you're doing a crowdfunding, then the buy-in is much lower. It can be $20, $50, whatever it is, but it's not several $1,000s because that's typically beyond the investability of your investor. So you end up with this shareholder registry of like thousands of investors. Just the cost of managing that would eat up all of the money that you raised. But if you integrate blockchain for your management system, your software management system to help take care of all of this, then you solve that cost problem of the crowdfunding and the Regulation A offerings.
So what are some of the things that investors want to know the most about private security before they're investing?
What am I going to get for my money? When
Lots
am I
of
going to...
skepticism too, I'm imagining.
And they should be.
Yeah.
They should be really skeptical. And the most common problem that I find in startup businesses is that they don't slow down and do the work of figuring out what are the actual unit economics involved with the cost of my product or my service, right? What will the market bear for the pricing for when I sell my product or my service? And then what piece of that can I give back to my investors? I teach a lot. I lecture down at Starter Studio, which is our technology accelerator program here in town, and
A lot of other great places too. You want to
Yeah.
plug that real quick?
no, that's okay. Right, so I work a lot with our local Orlando community and a lot of the startups in the area, and it's really surprising, right? So they're really passionate about their idea and their business, and they should be. I mean, you definitely don't want to invest with a business owner that is not passionate about their business. But investors want to know, have you done your homework? Have you done the math? Have you done the research? And it starts with doing a market analysis, right? And then applying financial economics to the market analysis that you have done to determine what are your forecasts and the reasonable expectation of return for the investor. You have got to have that. And if you don't, then it's fraud.
Well, I'm glad you touched on that because I wanted to go into stages of investments next. So can you talk about a little bit about the milestones throughout stages of investment, like with pre-seed, seed, and Series A? And where you should be on each one of those to kind of know you're on the right track here?
Yeah. So you're talking about valuation, right? So basically it's about how much is my company worth and what does that break down to per share of stock, or if you're a limited liability company, how much does that break down for a membership unit, right? Because we have these different vocabulary words that we use to designate whether we're talking about a corporation or whether we're talking about a limited liability company, right? And so just for the sake of shortening the explanation, we're just going to use the word corporation and stock to designate both, right? So in case anybody out there is like, well, I have an LLC, why isn't she talking about that? Right? So we're just going to make this conversation more efficient. So basically, in your business, the value of your stock, literally and technically, is whatever it is that you can convince somebody to pay you. Ta-da! That's the big secret.
Yeah.
So you have like all of these business valuation methodologies. EBITDA is a really popular one, right? And there's all of these different ways to go out there and kind of get a third-party appraisal to help you provide some guidelines if you're not sure. But at the end of the day, the true valuation is whatever you can convince somebody to pay, right? Whatever the market will bear. And we see that in the public markets all the time. But sometimes it's too early to get a valuation. Sometimes you don't want a prospective investor to lock you in to that particular valuation, because then what happens is later on down the road, well, you get somebody, you may be in you might be in a squeeze, in a desperate situation, an investor wants to give you less, then you've got a down round that makes you less attractive to future rounds. So what we're talking about here is that your pre-seed is your friends and family round. And yes, if your mommy is investing in your company, that is still a securities offering and you still have to comply, because if you don't, then future investors will run away. So you even want to comply when it's your friends and your family, right? So that's your pre-seed round.
Yeah.
Your seed round is usually anywhere, I want to say from $500,000 to $2 million is typically where we kind of see the sweet spot for the seed rounds. And you still, ideally you don't want to be valued then either. So we're looking for these instruments called safe agreements or called convertible notes, right? Are the two most popular legal instruments that we use in a pre-valuation seed round. And so it's basically says, we're going to value you. We're going to give you a bunch of money now. We're going to write you a big fat check, but we're going to come up with a formula to determine how that values us later in the future. So they will convert to equity. They'll convert to stock ownership into the future. So now I've got your pre-seed, which is your friends and family. Then you've got your seed, right, which is your pre-valuation. Then you get into your valuation round, right? And at that point, you're typically getting some pretty expensive investors in. That might be your VC, your venture capital firms. They're really expensive. They're going to want to come in more often than not as a preferred series. And as a preferred, that basically means we want to get paid back first, we want to get paid back twice, and we want equity.
Yeah.
Right?
Yeah.
And they're really expensive. And that's when the big valuation comes, right? That's where they stick a dollar sign next to the stock that they own that tells them what the value is. Now, typically, they're going to want to see some revenue being generated at this point. You've been bootstrapping it. You've been working long nights, down in the Mountain Dew and the Doritos.
Yeah.
Cool Ranch.
I like it.
And that's where you're getting. And then future rounds usually come in at various series from that point on, just kind of depending on what your overall business strategy is.
So the thing is, many people don't get to that point past the Doritos and the Mountain Dew.
They don't. They didn't do their homework.
Yeah. So what are some of the biggest mistakes that you see startups doing from an attorney's perspective? So they get past the Mountain Dew and the Doritos until 2 a.m. in the morning stage.
Well, I want to preface this by saying a lot of people don't know this. You'd have to go back at my history. Is that before I started my own firm, I actually was general in-house counsel to a series of successive startup companies that were dedicated to developing proprietary intellectual property portfolios for the pioneering of the unified communications and collaboration space. So if anybody is like, well, she's never run a business, she has no idea what she's talking about. I have run several businesses from idea to exit, right? I have seen a lot of stuff. I've been through a lot of drama with prospective investors, with engineers, with founders. It's been a really interesting ride. So the most common problems I see, for starters, is you incorporated wrong. Let's start there. A lot of people will talk to their accountant and say, okay, how do I get set up? Am I going to be a C corporation? Am I going to be an S corporation? Am I going to be a limited liability company? And that's where problem number one occurs. Corporations and limited liability companies can be both taxed as a C corporation, as an S corporation, and then LLCs have the third option of being taxed as a partnership. What I want everybody to know is that the Internal Revenue Service, the IRS, places restrictions on those tax designations that you are selecting for your business entity, be it a corporation or an LLC. If you elect to be taxed as an S corporation, right? A corporation taxed as an S, an LLC taxed as an S. You cannot issue more than one series of stock, period. This is a problem when you want to go out and attract investors because they want preferred rights. Anytime you issue a variation in the rights to your stock among your shareholders, you have to issue a new series. So oftentimes I'm stuck converting my clients into a different business entity so that they can run their business.
Is that one of the biggest questions you get, or what are some of the biggest questions you get from startups asking you for legal advice?
The biggest question I always get is, how do I get some money? Like literally, right?
Uh-huh.
Like they come in and they're like, okay, I need money. I need money. Can you help me get
You
money?
tell them
I
to
need
talk
investors.
to friends and family, or what do you do there?
Right. No, I love this because I'm like, all right, show me your business plan.
Uh-huh.
And they show me their business canvas model.
Yeah.
And I'm like, no.
Mm-hmm.
Then they send me a pitch deck. And I'm like, and where is your data?
Mm-hmm.
Right? Where is your data that went into developing your pitch deck that shows me where are you pulling these assumptions to develop out your financial models? And they can't do it. I mean, just overwhelmingly, they can't do it. And this is the biggest obstacle to being attractive to investors.
Interesting. So they're not even doing the basic stuff before they're going to an attorney, then, is what you're saying?
They don't know the basic stuff.
Mm-hmm.
They didn't think it was important. They thought they could hand over a pitch deck. And I tell them, listen to me. When you go in and you're getting to swoon an investor, here's how it works. You've done all of that homework I talked about, right? The market analysis and then the unit economics to develop your financial modeling. And you have this massive 150 page business plan, and it goes like this. Thud. I want to hear the thud of the paper. And then you show them the pitch deck. Nobody will read the business plan, but you better have it or they won't trust that you've done the homework to produce the data to go into the pitch deck.
Interesting. So they make it through this whole phase, and then they start dealing with the SEC and working with them. What are some of the most confusing things they deal with once they get to that stage?
Yeah, well, many of them don't know there is an SEC.
Okay. That's probably good for them to know.
Once they learn that, they're like, nah, right? Like, whatevs, they won't find me. And I'm like, it's not about the SEC finding you. It's about being attractive to investors. When you're looking to bring investors into your company, like later rounds, they're going to do their due diligence. And part of that diligence says, let me give you a colonoscopy, right? I'm going to do an endoscopy. I'm going to do a colonoscopy. I'm going to look at all of your junk.
Uh-huh.
And included in that junk is how you papered that friends and family round.
Great.
And if you didn't paper it right, the investor can say, you know what? That friends and family round, they have a right to come back and ask for their money back, right? And you don't have the money. You're going to give them my money because you didn't follow the rules, and that's too risky. Why am I going to invest in you when I can go invest in this company over here that did their homework? And so it makes it exceedingly difficult to get investor dollars when you haven't done things right.
Do you see a lot of situations in which somebody has a really good business plan or a really good model, but they didn't do that first part right to not be attractive to investors?
Yes.
Any examples or anything? I'm sure you have plenty.
Well, they just take money from people and put it in the bank account, and they say thank you.
Uh-huh.
Right? So, and then I'm like, well, what did you give this person for $50,000? Right? And they're like, well, I gave them 2% in my company. I'm like, what? I'm like, you valued yourself. Like, it's some ridiculous astronomical number. I'm like, we're going to do like a big old wonkin' down round. Did you talk to this investor that just gave you $50,000 for 2%, right? Do they know that this? And so it creates problems. And so then I have to go and I have to fix it. Recently, I had to reverse engineer somebody who promised all different kinds of compensation to their not employees because they're not technically on a payroll, but to their independent contractors, right? Like the other people they brought in to help them out, and they promised them percentages. And I was like, well, there's rules about that. And now I've got to reverse engineer your cap table and write these wonky agreements to document all of this, and it's really messy.
I imagine so. And then that makes it so investors aren't very interested.
Yeah, I'm deeply concerned about how that's going to work out. And I anticipate there'll have to be a full restructuring at some point in the future.
Interesting. So you're one of few blockchain expert attorneys, not just in Orlando, but the entire country. Just based on what you know, do you think there's going to be a demand going into the future for more attorneys specializing in what you do?
Oh yeah, because it's going to impact. Blockchain is going to infiltrate every nook and cranny of our lives to the same extent that has the internet and cellular phones. There's just no way around it.
And why do you say that?
Well, because blockchain is at its heart a data management tool. And the fourth industrial revolution, which we have embarked upon, we're in it now, is all about data management. It's about data analytics. It's about big data, small data, algorithms interpreting data. How do we manage all of this data? What can we derive from the data? How can we make our lives better utilizing the information that we've derived from data? And the answers are only as good as the data. But data analytics, the way that it is currently used, is largely inherently flawed, right? So I recently taught a seminar to a graduate level network science class over at the University of Central Florida on the ethics of data analytics. And I learned about algorithmic integrity in the process of preparing this seminar that I taught. And that process about learning that our algorithms and the answers that they produce are so inherently flawed because of the bias of the data pool that went into it, the integrity of the data that we're using is critical to determining the outcome of the formulas of the algorithm. So blockchain fixes this. Blockchain fixes this because we no longer have to do selective analysis on pooled data. With blockchain, we can just use all of the data so that there is no inherent bias in selective processes, right? So you may have learned about this in statistics, right? You kind of have this class that you're studying, and then you have to pool the class, right? And there's inherent biases in that pooling that you try to work out, and we suck at it, really, as people. But with blockchain as a data management tool, all of the data that is placed on the blockchain is there forever. And once it's recorded on the blockchain, as long as that blockchain maintains an important characteristic called decentralization, then the data becomes immutable. I had to look up that word. I didn't know what immutable was. It means it cannot be changed. It's like literally written in stone. And so for a blockchain network that's decentralized, crashing it would be similar to crashing the planetary network infrastructure that we have for the internet, right? It's really hard to overcome the blockchain network that's decentralized and change the data that has been recorded. So therefore, all of the data can be queried because of the data analytics tools that we have with artificial intelligence, machine learning, natural language processing. And because of this, it has a prospective use in nearly every business on Earth.
Great. Anessa, you're a wealth of knowledge. Thank you so much for coming on the BRITE podcast today and talking with us. Anything else you'd like to add? Tell everyone how to reach you as well if they do have questions.
Yeah, sure. If you have questions, please feel free to reach out to me. I can be found a lot on LinkedIn, right? LinkedIn, my profile is always updated and managed. I'm best at my social media profile on LinkedIn. My name's Anessa Allen Santos on LinkedIn. You can also look up my contact information, which is available on my website, Intellilaw.io. That's INTELLILAW.io.
Well, Anessa, thank you again for coming on. We appreciate it.
Thanks for having me.